The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to call 800-306-1990. Let's see what the markets are doing this morning. S&P 500 now down 3.35. The 10-year Treasury up 11 basis points to 2.99 is the yield on that. Mortgage-backed securities down 23 basis points. That's now remember, whenever the mortgage-backed securities go down, that means interest rates are going up, regardless of what you hear in the media. So I will share with you, we talk about this regularly, but April 21st, yes, Freddie Mac said that mortgage rates are 5.11%, went down a tick on their April 28th reading to 5.1, but, I like to give you the real numbers, and I'll tell you why I say the real numbers. Freddie Mac does their survey Monday through Wednesday. They report it Thursday morning. We give you the real numbers. That would be OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. Friday's number, loans locked Friday, 5.415. 5.415. That's an average. So some were a little lower, some were higher. Doesn't tell us what kind of points were given or received. 5.415. Jumbo loans, 5.275. I'm sorry, that's FHA. Jumbo loans were 4.89. So ironically enough, a jumbo loan is locking at about a little over a half a point less than the conforming loans at 5.415. Now, you can get some of that information if you know where. Obviously, here at Ron Siegel Radio, we give it to you. But why is all of that happening? Well, a lot of it has to do with the inflation numbers that we've talked about. And I don't want to get into that anymore other than to say Wednesday, the Federal Reserve will be announcing that they're going to increase interest rates for the discount rate by 0.5%. So that'll take them up to about 0.75%. Most of your HELOCs are about 6 points above that. So if you're looking at a home equity line of credit, you're looking at about 6 points above that 0.75. So 6.75, that will continue to go up, does not have bearing on mortgage rates. So, but they've got to do their stuff. I gave you all the information about the Federal Reserve and how wonderful they are and what their background is. We're going to get a lot of data this week. So Wednesday, we're going to get the ADP jobs report. And Friday, we'll actually get the big BLS jobs report. We'll see what those do for the market. Remember, I get a lot of calls right now. People are saying, well, Ron, I got to get locked in on our interest rate because interest rates are going up and I want to get locked in on it. Well, I want you to remember this. Yes, the Federal Reserve has an effect on the discount rate and HELOCs. They do not have an effect on mortgage rates. Mortgage rates are going to continue to go up the rest of this year. Mortgage rates do not like inflation. Next year, when we have our recession, we'll see mortgage rates drop if history repeats itself. And in a recession, real estate values increase. Other than one time, now 2008 is an anomaly because the mortgages or the real estate world created a recession. So it wasn't a fact that the recession caused rates to drop or values to drop. But that's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990.